Joining us for a conversation is Brett Richards of Goldshore Resources, which is on a journey to become Canada's next Tier 1 gold asset. Mr. Richards, welcome to the show.
Thanks, Maurice. Thanks for having me on again.
Well, glad to have you on the program, as Goldshore Resources has a number of promising catalysts on the horizon for shareholders in 2024. Before we get into company specifics, Mr. Richards, you have over 35 years of building wealth for shareholders in the natural resource space. Sir, would you please share some of your wisdom and insights with us on the space, and in particular, the disconnect we're seeing between the price of gold juxtaposed to the pricing for gold mining and exploration companies?
Yeah, I'm very happy to, Maurice. I think in my career, I've seen three major cycles, commodity cycles, and this one has been the most unusual, but also presents one of the biggest opportunities I see, and I'll speak a bit more about that in a minute. But over my 35 years, I've been involved in everything from copper, cobalt, gold, specifically with Kinross and Avocet and Rox Gold, and obviously now Goldshore. But I also built a diamond mine, built a copper cobalt mine, built a gold mine, and I've kind of worked internationally for the last 25 years. What I see in front of us right now is quite unique, and I don't have to reinforce to your audience and your listeners how bad 2022 and 2023 were in the context of kind of the geopolitical situation, multiple situations around the world and world conflicts that we're starting to see emerge, as well as kind of the macroeconomic dynamic of higher inflation, higher interest rates, which are being tempered now. I think we've just seen the perfect storm come out for a number of metals, and I think we're seeing it in primarily gold. We're also seeing the perfect storm start to develop for copper, and I think we're starting to see it for uranium as well. And I think this bull run that we're entering in 2024, there's no doubt about it, we're entering a major bull run here. I think commodities are going to do very well, and those three are going to be, I'll say, the preeminent commodities that outperform others. I think there's an argument to be made that lithium has been oversold and it underperformed. There's an argument to be made that nickel will have its day, and I think it will have its day. But just getting back to gold and gold specifics, in the whole time, and I've always been a gold investor. I've always been very strong on the preservation of wealth that gold emulates. I think what we've seen is the uncoupling of valuations of gold companies to where they have been historically, or where they have been kind of on a per ounce basis based on their resources. I look at Goldshore today, we're trading at $4 an ounce. Now, historically, Inferred resources trade anywhere from $10 to $20 an ounce, and sometimes much higher. Measured indicated trade at $50 to $100 an ounce, and then proven and probable above that. The disconnect is the valuation gold juniors have seen in the last 2 years, with capital leaving our industry and very few pools of capital coming in to provide liquidity necessary to advance projects. And as a result of that, there are a number of extremely undervalued companies in the gold space. And yes, Goldshore is one of them. But I think that allows us to have the momentum to outperform not only the gold price, but also our peer group. And let's face it, we're entering an election year in the U.S. Things tend to stabilize and normalize in an election year. And there are a number of catalysts, I think, that the election will bring to the gold price, as well as, I'll say, the confidence that the election results will have in taking risk off money and putting it risk on again into our space. So I think we're entering a very, very interesting year for both gold and specifically Goldshore.
So is it fair to say we've hit capitulation?
Yeah, I think so. I think we've seen the inflection point where we are going to kind of bounce off it. I think gold price has seen it, trading at 2050 today. We've seen it. We've seen the floor. We've seen the floor elevate from where it was at 1650, and then 17 and 1850, 1950. I think we've seen the floor come up now, where it's probably more around 1900 or 1950 than it was 1650. So that let's face it, that 300 $100 adjustment in the range that gold will trade in is a 15% increase, which is not bad for the gold price. It's doing what it's supposed to do. It's supposed to act as a hedge in turbulent times. And we have never seen more turbulent times than we've had, and gold has been performing. So capitulation, for sure. Inflection, we are entering a different trajectory now, and that's up.
Well, sticking with gold exploration companies, what are the 5 key criteria that one should consider before they become a shareholder in this space?
Yeah, I've been really fortunate in my career to see how these 5 career criteria impact the building of a mine. I've built mines in Southeast Asia and Africa, and I've been a part of mine builds in North America and South America. But I think to make things easy, as easy as you can make a mine build, but you need certain criteria, and it always starts with the people. And the people drive the value by the decisions they make. And the second thing is really about infrastructure, and working in areas where there has been no infrastructure is extremely challenging. So I can attest to the fact that you want projects that have access to infrastructure. A, it reduces capital. B, it speeds up the time frame in which you can build the mine and get it into a cash flow producing asset. And C, it is really meaningful when you're looking at power, roads, rail, access, international airports, access to governments, access to workforces. All of those things, will dictate the speed at which you are able to build and the cost at which you're able to build it. So access to infrastructure is extremely important. I then look for the upside, and that's the size and scale. Like, how big is this project? Is this deposit? Is this junior mining company? How big of a resource do you think that is there? What are the early stage signs that point to a monster deposit? And I look for those because size and scale and potential are very important. And the fourth thing I look at is grade. I think it's the most underlooked, undercooked criteria, because grade is, obviously the most important things one of the most important things when it comes to mineral economics. Yes, tonnage, yes, all of the other, I'll say, economic drivers, but grade is extremely important, and because high grade operations and high grade projects become real mines at the end of the day, and they're not sitting waiting for a market, a commodity market, a gold price to come to them. You don't have to say, hey, this only works at $2,000 gold or $1,800 gold or whatever. It works at any gold price, and that's what grade does for you. And I think grade and metallurgy kind of hand in hand. Grade's great, but if you can't liberate it, it's not of much use to you. So I think grade and metallurgy are also quite important. So it leaves us to that jurisdiction as well, and location. And having worked in parts of the world like the DRC, Zambia, the Congo, Congo Brazzaville, as well as West Africa, jurisdiction is very important, and it comes with, the political certainty. And we're in Ontario. Our project is in one of the greatest jurisdictions in the world. So really, when you wrap it all up, it's really people, it's place, location, it is size and scale, it's grade and metallurgy, and it's access to infrastructure. And I think that's what I look for as an investor when I'm investing in projects. I have right now about 25 junior mining companies in my portfolio, and they all have to tick about above a 90 out of 100 on those criteria. And 85 to 90 is kind of where I look for today.
Can we go back to grade for just a second and keep it germane to gold? What's the grade that you're looking for on an open pit versus an underground mine operation?
Yeah, it's just speaking generically. There are open pit operations, gold open pit operations in the world that work at a lower grade. Let's call it 0.5 or 0.6 or 0.7. But they tend to be driven by volume. And there is a cost curve between volume and grade that, it comes with high risk because there's a lot of capital that has to be required to build a high volume 70,000 ton a day project at 0.5. It's economic. It produces a lot of ounces, but you have to get over that fixed cost threshold, and that's volume. I think at the higher you go closer to a gram, the easier it is to work in this gold price environment. And if you're over a gram, I think it becomes much more meaningful. And let's face it, the difference between 1 gram and 1.2 grams doesn't sound like a lot as a number, but it's 20% more grade and 20% better economics and 20% more NPV, 20% better IRR. It is really, really important because the numbers are so small. The adjustments or the increases in grade can really elevate the economics at the end of the day. So I think in this gold price environment, you need somewhere close to a gram for it to work, and the upside on the gold price is really just the upside on the project economics. Is not something I think we're all working to anywhere from 1750 to 1850 kind of pit shells, and I think that's what we're all comfortable with from a resource standpoint. So yeah, I think grade is tremendously important when it comes at this stage.
Well, for our audience members, remember those numbers. Now, one of those said companies that is selling at a deep discount and offers shareholders the virtues you just outlined is Goldshore Resources, which hosts a 6 million ounce Moss Gold project in Ontario, as you stated, sir. Mr. Richards, for someone new to the value proposition, please share the investment highlights of Goldshore Resources.
Yeah, so we are, as you say, Maurice, we are trading at a significant discount to not only our peers and to historical kind of valuations on ounces. I think the value proposition has never been better than it is today, and unfortunately, I said that in December as well. But the market hasn't moved much, and we haven't seen any activity just yet. So when people are looking at upside versus downside protection, you can say that Goldshore is only going to get bigger, and at current valuation, it's trading at the lowest multiple of any real project that's out there that has the potential of getting built, at $4 an ounce, when our peer group's trading at $15 an ounce. So there is a 3 to 4 times multiple just to re-rate to our peer group. And that will happen. And that will happen when the market starts to look for gold opportunities relative to other opportunities. So I think we're in for a heck of a great year when it comes to valuation re-rates and valuation resets. But we also have a number of catalysts this year that we're going to work on in order to maximize, our ability to increase the share price. And it's not just about, promoting, it's actually about doing stuff on the ground that adds value.
Well, Mr. Richards, take us on site to the Moss Gold Project, which is open at depth and a long strike, and give us a tour of the project and some of the investment highlights that has your team excited for 2024.
Yeah, Maurice, I think, when we first started chatting, I said a long time ago that I really felt that the Moss project was going to be a tier 1 asset. And I continued to say that mantra in our presentations, and I continue to say it today. This is going to be a tier 1 asset in my view. So what is a tier 1 asset? Well, a tier 1 asset is a 10 million ounce minimum deposit at the upper quartile of grade and at the upper quartile of recovery, and at the lower half or lower quartile of the cost curve, and production profile of a minimum 500,000 ounces a year. And I think, this project will get there one day. Now, it may get there in phases and stages, but I do believe it has the potential, the resource potential to deliver on that. So what's getting us excited? Why is all that? Well, we've had to move to the market a little bit last year. We started a PEA on a bigger project that was kind of more $700 million. And, not unlike some of our peers where it delivers a couple 100,000 ounces a year for 15 years. But the CapEx is extremely prohibitive for when it comes to us being a $30 million company. We wouldn't be able to raise the equity to build that project. So we pivoted, and we pivoted for good reason, because the market wasn't giving us value for that. And we pivoted and we said, well, what about looking at the scope of a smaller project, so small flotation, regrind and CIL for the sulfide associated material, and heap leaching, the balance with, playing with the cutoff grade to really kind of maximize and optimize the economics. And I say cutoff grade from high grade to low grade, not ore to waste. Mm-hmm. So we are investigating all of that, and I think at the end of the day, we will draw a conclusion, irrespective of what the market is looking for. We will draw a conclusion as to where we think this needs to go to maximize the value. And I say that because I think you have to go through these scoping studies from the highest size to the lowest size and say, what is the best approach for us? What is going to drive value for shareholders? And we're not there yet, but we will get there. But along the way, we have some answers and some boxes to check. And the first one is we are going to put out an updated mineral resource estimate, probably next week, end of next week, something like that, but certainly before the end of January. And that mineral resource update, as far as guiding the market, what we've done is we wanted to remodel the low-grade material to give us a greater degree of confidence in the grade distribution of this deposit. Because if you remember, 55% of the deposit is at 1.84 grams. So it's extremely high grade relative to open pit projects in Canada. So 1.84 grams. We're trying to find a way to maximize that. And we wanted to better understand and model the low grade so that we have a total resource that we have confidence in, that is going to be the basis of a real project. And we had it, and we just want to even tighten that up and tighten up the integrity of that resource. And I think what we're probably going to be left with is maybe lower tonnage and a slightly higher grade. That was the aim at the end of the day, is to optimize and maximize grade. And as we've talked about, grade is extremely important to these projects and to the mineral economics of these projects. So that's the first process we're going through. The second process is understanding whether the low-grade material can be heat leached. So we're working with a company in the U.S., Caps Cassidy, in order to do the metallurgical test work and the column testing necessary to understand, the heap leachability of this material. Because being able to heap leach, and even at a 50 to 55% recovery, gives us a lot of optionality on scoping a project, either a flotation project or a whole ore leach process. It gives us a lot of flexibility. And, knowing the recoveries of various process methods is key to, optimizing and maximizing what the project ultimately looks like. So that's the second real driver. And then I think coming out to the market and saying, this is what we're going to do. And then getting a drill program funded. And we're talking to, if you remember back in November, we brought in a strategic investor. Mm-hmm. And we've been in discussions with that strategic investor all of January. And they are as bullish and positive on this project than I am. They're just as bullish. And they're saying, let's drill. Let's get the drills turning. Let's get this defined. Right? You tell me there's a tier one resource here. Let's go prove your thesis. Let's go prove your concept. And we need to drill. And we need to do it in a smart way, because raising capital at a very low share price, you need to be very careful on, not blowing out the cap structure. So all of these strategic initiatives and catalysts that we're working on for 2024, I think are going to hit the market at the exact right time. We see this market gain some momentum, during this election year. So a lot of positives that, we in our group have been working on over the last 6-8 months, defining what that drill program will look like based on high probability results and historical drilling and all the geochem work and mapping and field work we did this past summer. It's all coming to deliver a drill program for us that I think is going to be very exciting for 2024.
Going back to the updated mineral resource estimate, I don't know if you can share this because it's a forward-looking statement, but are we looking at an indicated on this as well, or is it going to remain in the inferred? Can you share that? If not, I understand.
Yeah, no, I think I can share, what our goal was. And I think think our goal was to bring, somewhere order of magnitude of 1 million ounces up into indicated 20%, something like that. That was our goal. And how do we look at the historic data? How do we, give that a certain degree of probability? How do we look at current data and some of the twinning we did and some of the new holes we drilled? How does that all incorporate into the model at obviously a higher probability? And, our goal was to kind of remodel that low grade. If you remember, we have 2 grade distributions. We have around 55 or 45% of our material with a kind of average grade of, let's call it 0.5. And we have 55% of our material with an average grade of let's call it 1.8, 1.84. And when you merge them, we have just over a gram combined. So it's a bit of a roller coaster grade distribution, a lot of low grade, a lot of high grade. And this is what's driving our thought process when designing a plant or a process to extract. And I think this is why we needed a better understanding of the low grade. And yes, some of that's going to come up into indicated. We have a goal, but let's see where we land next week. But I have a high degree of confidence that this MRE is going to form the basis of how we look at getting to 10 million ounces. This is now going to be the first piece of the puzzle that is going to allow us to get take a path to 10 million ounces.
So to summarize, we have an updated MRE, which is pending possibly next week, new strategic partners that are very excited about the value proposition, and then also an updated PEA possibly as well, correct?
Yeah, that's correct. And again, I've been trying to guide the market as to the timing of it, and I'm still a little apprehensive about putting a month or a quarter to it, simply because getting through the MRE and getting the results of that, getting the results of the heap leach testing will probably be May. And then I think we have to really sit down and scope out what it is we want to achieve at the end of the day. And, a small phase 1 project, the market might say, yeah, you can finance it and you can build it, and that's great. But, where do we think value is going to come from? If we want to define a 50,000 ton a day project and, $1.5 billion capex, that delivers a $2 billion NPV, then why wouldn't we do that? And so the permutations of scoping what the MRE is going to look like really needs to be calibrated when we get a little closer. Once we get all this information, we'll be able to talk about what a PEA looks like as far as scope goes, because we've gone through the exercise already of looking at small scale state phase 1 and a larger scale project, whole ore leach for everything. And I think the heap leach testing is going to allow us a permutation that we haven't explored yet: heap leaching, whole ore leach, and possibly also flotation. So I'm excited to see the results of this, because those types of companies are trading at $40, $50 an ounce. And that's a $200 million company for Goldshore when we're sitting at $30 million today. And that excites me, because I can deliver the value that we've always talked about to our shareholders. Even our original shareholders who came in on the very first financing at 65 cents, I will deliver a return.
Well, I find this so intriguing. I wish I could be a fly on the wall as you're having these discussions. All right, sir. Multi-layered question. What is the next unanswered question for Goldshore Resources in 2024? When can we expect to answer, and what will determine success?
I think I'm going to answer them backwards. I think success for us this year is starting on that path to 10 million ounces. And that is going to take more people. It's going to take, more resources. It's going to take more capital. It may well take different people. It may well take, a different strategy in a drill program. And I think success at the end of this year looks like, hey, we have defined what we've always said we are. And that is a tier 1 asset. And we've just taken 1 or 2 or 3 major steps to getting there. Because on the back of a large drill program, obviously there will be another resource estimate come out in the future, maybe a year from now, maybe 18 months from now. But those will be the next catalysts that really define what we are. And that is, I think, the next tier 1 asset. So that's what success looks like. How do you get there? And this is the question that we all talk about all the time. And some of them can be optics, and some of them can be perception, and some of them can be historic and legacy. And I think we get all that. we are first and foremost investors in this company. I am first and foremost an investor. I want exactly what everyone else wants out of this investment, and I want to make money, and I want to make money for my shareholders. And that's first and foremost. So,
and if I can just interject there, I can vouch for that. You and I have discussions offline, and you're very passionate about Goldshore Resources shareholders. I want to emphasize that, the shareholders. You're deeply concerned about making sure that they're taken care of, not just today, but in the future. So sorry to interrupt you, but I had to just make sure I got that point across.
Yeah, it's a good point, Maurice. I talk to our shareholders, whether it's an elderly lady that has 100,000 shares, or whether it's a major institution that has 5 million. I talk to them every day. And I want people to know, what that, it's not just my commitment, it's the commitment of my entire team. And you won't hear this from many CEOs, but, I want what is best for our shareholders, for our investors. And if it means, changing the team up, if it means changing the pieces on the chessboard to deliver that value, to deliver it. But let's face it, everybody has different skill sets at the end of the day. So I am the first proponent of coming up with a dynamic that works. And there are very few people, I think, could disagree with that, because I think having the people, that's the number one criteria in a successful company. Having the people to drive this is great. We've been at it now for going on 3 years in June. So, sometimes you need to change the tires on the car. Sometimes you need to paint it. Sometimes you need to change the engine. But whatever that is, the car is going in the same direction. And I think our company is going to go through some of that change. We brought in a strategic investor. They want to help drive the value in this company. And this is what we asked for. We asked for this 6, 8, 10 months ago, and it was very difficult to find. But now we have it. Now we can move forward. And I think exciting times for 2024. And I can't underestimate where we are positioned right now. I can't overestimate where I think we could be at the end of the year, because I think this is the year we can outperform the market, our peer group, and we can get re-rated to a valuation that is more aligned with where we should be in today's market.
Well, leaving the project site, let's look at some numbers. Sir, please provide the capital structure for Goldshore Resources.
Yes, I believe we are up to 260 million shares out. We've had to do some financings down at 10 cents. It wasn't pretty, and it wasn't easy to do given where we have raised money in the past. But hey, this is the market work, and we had to do it, and I don't regret doing it, because it provides the resources to keep the story going and keep the work doing that we're doing. And I think it's extremely important. I don't want to be a company that, turns off the lights, goes on care and maintenance. But you need capital, and you need capital for those things. So we've got about 260, 270 million shares out, trading at 10 cents today. I think it's, great value to get in. I think there's some important things here. We have our strategics are around 10% today. We have other shareholders, insiders, board, and management at probably around 10% today, 11%. And we have the strategic entity that wants to increase its position. I think the dynamics for our cap structure, slowly entering a period where we'll raise some money for drilling with our strategic, and then do it again. Unfortunately, it tightens up the market for the retail market, and people will not be able to participate in private placements. They will not be able to participate in fundraising. They're going to have to get exposure to Goldshore through buying through the market, and that's a good place to be for Goldshore and for shareholders.
Now, the stock had a disappointing year in 2023, and some of that had to do with one of the strategic partners selling. And yet, the answer to that is, of course, you have a new strategic partner looking to add to their position. But can you kind of comment on that for us?
Yeah, great question. So back in, I think it was April of last year, Wesdome indicated their interest in selling non-core assets in order to kind of generate capital for themselves. And they were in their balance sheet was required it. So, and we have open dialogue with them on their position and their interest in selling. We were able to cross around 36 million shares, back in December. And so there's a lot of appetite to take them to take their piece out. And we will probably have one more cross to do because I believe they still own 19.6 million shares, and they still have one payment left at feasibility study or June of 2025, which is not very far away. It's 18 months away of another 12.5 million shares. So I think we'll be working to cross them. And Wesdome, they have to look after their best interests. I get it. And they've been very, very good working with us collaborating with us on how they do that and how they have a liquidity event with their stock. Now, our strategic bought some of that, and they will probably continue to buy more of that. And I think that, again, sends a great message to the market that we have a multi-billion-dollar fund that is committed to going all the way with us, and will provide the equity to do so along the way. You can't ask for a better partner than that.
You just illustrated something that is paramount, I believe, in this space, without even probably realizing you just shared it. But so often, speculators in this space, they follow an interview, they like the value proposition, they buy the stock, and then they don't keep up with the company. They don't read the press releases, they don't correspond with the CEO, and the share price drops. Here we have a situation where the share price dropped, and it had nothing to do with the merits of Goldshore Resources. None. You had a strategic partner that was needing capital themselves. So they sold shares in non-core assets that they had. There's no relationship with the merits, the virtues of Goldshore Resources. The end result is it's called a sale. And that sale begets another sale because that person that's not keeping up with the companies in their portfolio, they sell because the price went down. And I am one of those buyers, as you know, sir. I have been adding to my position. I will continue to add to my position. So I'm looking forward to 2024. Now, before we close, sir, what keeps you up at night that we don't know about?
Oh, that's a great question, and I have been asked it before. But the market has been the key thing that keeps me up at night because of it's so disconnected to reality. And I think we're going to see a bit closer to reality come back to us in 2024 and in 2025. And to a certain degree, it will be impacted and affected by who wins the U.S. election. And I think for gold, one outcome will be good and the other outcome will be great. They're both going to be positive outcomes, and we are sitting in a position to benefit from that. And we are advancing the asset. So you've got compounding positive events happening for gold and for Goldshore. So it keeps me up at night, when we see such volatility in the market to headlines. You see a headline, boom, the gold juniors go off 5 to 7%. You see another positive headline, or you put drill results out, nothing happens. So the liquidity events that happened in 2023 and 2022, but more so last year, were people looking to become liquid, and they did it on high liquidity events like press releases. So a press release would come out and your share price would go down. It would trade 5 times volume, and we saw that right across the board with a lot of people. So I don't think that this year is going to perform like that. I think we're going to see pools of capital start to move from sectors into natural resources, and yes, oil and gas as well. But they're going to move into our sector where they have the last 7 years, we have had no new capital, fresh capital come back. I think we're going to see that in 2024. And as a result of that, we're going to see a bit more reality. We're going to see this recoupling of gold equities to gold price dynamics of days gone by.
Last question, sir. What did I forget to ask?
I think we've covered everything, Maurice. I think, at the end of the day, investors want to feel like there's something, positive coming. And you can talk about it, but you can also illustrate it in, what drives the market, what drives gold price, what drives gold equities. And I just don't think you're going to see that better perfect storm, as I described it, where all of those dynamics are is a lot of wind in the sail of gold equities today. The macro, I'll say the macro, the geopolitical situation in the U.S. election that's about to occur, all of these things are going to bode very well for gold and going to bode very well for Goldshore. Pick your asset, be very, I'll say, cautious that the criteria you're evaluating projects on, ticks those boxes. Because you can have an asset in a foreign country and you want exposure to gold, and they maybe have a lot of it, but you don't know the political dynamics of the leadership. You don't know if there's going to be a military coup. You don't know the people running it. You don't know a lot of things about it. It's not a good investment. Invest in what you know. Invest in the criteria that will ultimately drive value. And, I think that is the most important, I'll say, message to investors. Do your due diligence and make sure that your answers, your questions are answered and those answers are acceptable. So I leave you with that, Maurice, and thank you for having me on again today.
Oh, great words of wisdom. Mr. Richards, it's been a pleasure speaking with you today. Wishing you and Goldshore Resources the absolute best in 2024.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.